Welcome back to the Daily Crypto Deep Dive, and today we are talking about something that still sounds niche to a lot of people, but it may end up becoming one of the most important business stories in crypto over the next few years. Because prediction markets are no longer just some strange internet side game where people make punts on random events. They are starting to look like a serious product category, a serious revenue opportunity, and potentially the next big battleground for exchanges that want to move beyond simply letting people buy and sell coins. Before we go any further, if you are looking for an exchange to actually use while all of this plays out, Kraken is the one we recommend. It has built a serious reputation across multiple crypto cycles. It gives you access to a wide range of assets, strong security, deep liquidity, and tools that work whether you are just getting started or already trading properly. So if you want a platform that feels established, trusted, and built for real crypto users, use our Kraken link in the description and get yourself set up. For a limited time, we will be giving new Kraken users that use our link 20 XRP into their new wallet. Now, if prediction markets really take off, then crypto platforms stop being just places where you buy Bitcoin, Ethereum, Solana, or XRP. They start becoming places where you trade real-world outcomes. Elections, interest rate decisions, inflation numbers, court rulings, sports results, company earnings, ETF approvals, even geopolitical events. So this is not just another feature being bolted onto an exchange. This is a shift in what an exchange actually is. Now let's make this dead simple from the start. A prediction market is basically a market where people trade the probability of something happening. If the crowd thinks an event is more likely, the contract price rises. If the crowd thinks it is less likely, the price falls. That sounds technical, but the idea is actually very easy to understand. Instead of just having an opinion, you put money behind your opinion. Instead of just saying, "I think this will happen," you are backing that view with capital. And that is why these markets are so powerful. Because the internet is full of free opinions. Social media is full of people sounding confident. News is full of experts making big calls. But once money is involved, the conversation changes. Suddenly being wrong costs you something. Suddenly confidence has to be backed up. Suddenly the market becomes a live scoreboard of what people actually believe, not just what they are saying for attention. That is the ideal version anyway. The bullish case, the exciting version, the version where prediction markets become a kind of truth machine. A place where probabilities get priced in real time by thousands of people willing to risk money on what they think happens next. And you can see why crypto people love that idea. Crypto has always been built around markets, risk, volatility, conviction, and being early. So when you tell crypto users they can trade not just coins but outcomes, that fits the culture perfectly. Not just buy the asset, buy the probability, not just read the headline, trade the odds behind it. But here is where this topic becomes much more important than it first sounds. The real reason prediction markets matter is not because they are intellectually clever. It is because exchanges desperately need new ways to grow. Think about the normal exchange business. It relies heavily on activity in crypto itself. If Bitcoin is running hard, people are active. If meme coins are exploding, people are active. If an ETF gets approved, people are active. But when the market goes flat, when prices chop sideways, when traders get bored, activity can dry up fast. People stop checking the app as often. Volume weakens. Fees soften. Momentum disappears. Prediction markets offer a way around that problem. Because they do not depend only on crypto being interesting. They depend on the world being interesting. And the world is always interesting. There is always an election somewhere. Always a central bank decision coming. Always a big legal case. Always a major earnings report. Always a sporting event. Always a macro shock. Always some piece of uncertainty people want to trade. That means an exchange no longer has to wait for Bitcoin to wake everyone up. It can monetize whatever the world is focused on that day. That is a huge shift. Because now the exchange is not just tied to the crypto cycle, it is tied to the global news cycle. And the global news cycle never really sleeps. So from a business point of view, you can see why these platforms are interested. More engagement, more time spent in the app, more reasons to keep funds on the platform, more transactions, more fees, more stickiness. And that stickiness matters, because one of the biggest problems in crypto is that users are not always loyal. They move where the action is. They move where the best incentives are. They move where the hottest token is. They move where the best interface is. But if a platform gives them reasons to keep coming back every day, even when crypto itself is quiet, that platform becomes much stronger. This is why prediction markets are not really just a product story. For years, exchanges have fought over the same basic areas: spot trading, futures, leverage, staking, new listings, rewards, maybe cards, maybe yield. Prediction markets open a wider lane than all of that. They let a platform capture attention from politics, macro, sport, regulation, and public events. In other words, they turn uncertainty itself into a tradable product. And when you think about it like that, you start to realize this could become one of the most powerful ideas in digital finance. Because what is really being monetized here? Attention, curiosity, uncertainty. The desire people have to not just watch events unfold, but take a position on them. Social media monetizes discussion. News platforms monetize information. Search engines monetize intent. Prediction markets monetize uncertainty. That is a very serious category. Maybe one of the biggest there is, because uncertainty sits underneath almost every major event people care about. Now, there is another reason this matters for crypto specifically, and that is stablecoins. Prediction markets work best when money can move quickly, sit in cash-like form, and settle efficiently. That makes stablecoins a natural fit. If this sector grows, then stablecoins grow with it. Because stablecoins become the fuel, they become the settlement layer. They become the dry powder users keep ready to deploy when they want to take a view on an event. So when you hear prediction markets, do not just think about people punting on outcomes. Think bigger than that. Think about a full stack forming around them. Exchanges providing access, stablecoins providing settlement, on-chain rails making movement fast, liquidity providers tightening markets, content creators and communities driving attention. This can become an entire ecosystem, not just a feature. That is what makes this worth paying attention to. But now we get to the problem, because there is always a problem. The bullish story is obvious. Supporters will tell you these markets are smarter than polls, smarter than pundits, and more honest than social media. They will tell you markets force people to stop pretending and start pricing. They will say prediction markets can actually improve information discovery because people reveal what they truly believe by risking money. And there is something very attractive about that idea. Let's be honest, most online commentary is rubbish. Most confident predictions disappear the moment they are wrong. Most people face no cost for talking nonsense. A market is different. A market keeps score. A market makes people pay for being wrong. That is the strong case in favor. But the bear case is nasty, because critics will say this is not some elegant truth machine. They will say it is gambling with a smarter suit on. They will say it creates incentives for hype, manipulation, and conflict. They will say once real money enters the picture, especially around politics, public events, and major news, things get messy fast. And this is where the story becomes really important. Because the actual fight is not whether prediction markets are interesting. They obviously are. The real fight is what they are, who controls them, and who gets to profit from them. Are they financial products? Are they gambling products? Are they some new hybrid that does not fit cleanly into either box? That question matters because the answer decides everything. If regulators treat them as legitimate financial contracts, then big regulated players have a chance to scale them properly. If regulators treat them mainly as gambling, then the political and legal path gets much harder. And if the rules stay blurry, which is very possible, then crypto will do what crypto always does. Some of the activity will stay regulated. Some will move offshore. Some will move on-chain. The market will fragment, and the strongest players will be the ones who handle trust, liquidity, and compliance better than everybody else. We have seen that pattern before. Demand appears, the product grows. Regulators react late, the market splits, then the winners emerge. Prediction markets could follow that exact path. And there is another problem as well. Once you start turning every outcome into a market, you also create incentives around those markets. If enough money is involved, people will ask all the obvious questions. Can these markets be manipulated? Can insiders exploit them? Can sentiment be pushed? Can people profit from privileged information? Can the existence of a market itself distort behavior around the event being traded? Those are not silly questions. They are the natural questions that arise the moment money meets uncertainty. So this is not a clean, simple story about innovation. It is a messy story about innovation colliding with regulation, incentives, and power. Drop your thoughts in the comments, smash like, follow, and as always, we will see you at the top.